All right, well, I make it 12 o'clock on the dot, so
Cool.
Let's get started with our webinar today. Welcome everybody who've joined us in from the waiting room. This is our presentation all around R&D tax credits. The reason we've called it Unclaimed R&D tax credits is according to some recent research that came out from the Treasury and from HMRC. There's an estimated £84 billion of unclaimed R&D tax out there, where businesses are either not claiming enough or are unaware that they were eligible for a claim. So hopefully during this presentation we'll be able to cover some of that ground and explain what it's all about and how you go about claiming and whether anything that you're doing at the moment might be eligible for that. I'm delighted to be joined this morning by Riki Gangola, one of our partners here at RDP, so welcome. This presentation is going to last about half an hour, 45 minutes. We'll have time for questions, hopefully, at the end if you've got any questions. Please use the Q&A option on your Zoom toolbar to put any questions forward. And what we'll do is we'll come back at the end and answer those live. We are also recording this presentation so that we can have an on-demand version available on the website later on if you need to go back and recap anything. But at this point, I'm going to hand over to Riki and I'll be back at the end for the questions. So over to you.
Thank you very much, Jo, for that kind introduction, and welcome everybody to the webinar. This is me, believe it or not, it was me 15 years ago. So as you can tell, I've been with RDP Newmans for a number of years now. I look after private companies, private groups of companies, individuals as well, providing accounting, tax and general commercial advice. So R&D, if we just cover some of the topics we're going to look at today, just a brief introduction into the background. So we'll look at the qualifying conditions, a definition of R&D, eligible activities, eligible expenditure, and if we get time, we can have a quick look at subcontractors and grants and the interaction there. I'm not sure if we can move. Thank you, Jo. Move the slides on. Thank you. So just some background. The scheme was introduced in 2000. Historically, the R&D spend in the UK, it was lagging a lot of other countries, particularly the US and the Far East. And in the 90s, the government felt they needed to encourage this type of expenditure, looking to move to a more knowledge-based economy and improve productivity. So what are the basic criteria? The claimant must be a limited company. That company needs to be a going concern, by which I mean it needs to be able to pay its debts as they fall due and continue to trade. And it must be within the UK corporation tax regime. Now, it's a tax-based benefit, so the claimants either get to reduce their tax liability if they're profitable, or they get a tax credit if they're not making profits. By tax credit, what I mean is they get a repayment, a cash repayment from the revenue, or possibly an increase in carry forward losses. The claim itself is made through the corporation tax return, that's the CC 600, and the deadline for making a claim is 2 years after the end of the financial year. So if we're looking at, for example, a June 21 year end, that would take you through to June 23, whereas the normal CT 600 filing deadline is June 22. Okay, so let's look at the two schemes and where they would apply. You've got the SME scheme. That applies where you have less than 500 employees and a turnover of less than 100 million, or a balance sheet total of less than 86 million. By balance sheet total, what I mean is gross assets. And these tests are for a standalone limited company. I'll come on to groups later. So the enhancement rate is 130%. So any qualifying R&D costs, not only are they allowable for corporation tax purposes, but you're able to deduct a further 130%. So if we had R&D costs of £10,000, you would actually get a deduction for corporation tax of 23,000. Just double checking my maths, 23,000. So it's a very attractive scheme. Where a company is not paying tax, you get a cash-free payment, as I mentioned previously, and that's 14.5%. So taking that same £10,000, that's £1,450 to come back. The RDEC scheme, that applies to larger companies, so companies where there are 500 employees or more, or turnover of more than 100 million, or balance sheet assets of more than 86 million. Now, the tax credit rate here is not as generous, it's 13%. So if we take that same £10,000, it's 13% of that, which would either reduce your corporation tax liability or lead to a tax repayment, like a cash repayment for entities that aren't profitable. Okay, groups and associated companies. As I mentioned earlier, the criteria differs where you've got a group or associated companies. So the calculation of staff numbers for SME status takes these companies into account. All group staff must be included. So we've got a little example here. Company A is a university spin-off with 3 staff. They are bought by a larger tech company with 450 staff. This company also owns Company B, which has 60 staff. Now, Company A would not qualify as an SME because it is part of a group with more than 500 staff and would have to claim R&D through the larger company RDEC scheme. Okay, so this table demonstrates what we were talking about earlier. Sort of halfway down, you've got a group situation, 50% plus ownership, which leads to inclusion of all staff in all group companies, with a sort of tapering down for reduced ownership down to no staff being included, where you have a 25% ownership of another entity. At the bottom of the table, you can see qualifying bodies being referred to. That would be educational institutions or research organisations, non-limited company entities that are either associated or part of a group. Okay, another little example. So we've got Company B, which has 600 staff, owning 30% of Company A, which has 100 staff. Company A would qualify as an SME because only 30% of Company B staff have to be included. Company B is a large company because it has more than 500 staff, so that company would have to claim under the main scheme. So let's have a look at the definition of R&D in a bit more detail. The revenue view R&D or define R&D slightly differently to the sort of layman's definition using commercial or engineering terminology. As far as the revenue are concerned, R&D needs to be an advance in knowledge in a field of science involving projects that resolve technological uncertainty. Scientific or technological uncertainty exists when knowledge is available, but how in practice, but how to achieve something in practice is not clear to a competent professional. So it's quite a detailed and involved definition that needs to be borne in mind. Okay, so in terms of the technical legibility, if we sort of expand a little on the previous slide, the work needs to be part of a project undertaken during the claim period. That is, the project needs to be undertaken during the claim period, technologically challenging, not readily deducible, that is, to a competent professional in the field, related to the trade of the claimant company, that's an important point, and also, of course, aiming to make an advance in science or technology. Okay, what is a project? Let's drill down further. HMRC define an R&D project as a number of activities conducted to a method or plans in order to achieve an advance in science or technology. It may be part of a larger commercial project. Eligible projects seek to make an advance in science or technology and have a tangible start and end date. So hopefully the end date will be a successful outcome, a resolution of that uncertainty. Okay, so a little example here. Scientists studying the structure of bacteria. I'm not even going to try and pronounce that. We've got a plate of bacteria accidentally left open overnight and grows mold. Scientists noticed that the mold has killed the bacteria on the plate, and penicillin has been discovered. Now, the R&D around this type of scenario would be the research into the penicillin mold, testing of it, etc., that would follow through from the sort of initial observation. Okay, technical advances. One needs to make a technical advance in order for the spend to be qualified. So let's have a look at that definition. To be a true technical advance, the outcome of the project must represent an increase in overall worldwide knowledge, however small, in an area of science and technology. So we've got 4 knowledge or capability in a field of science or technology, work that seeks to make an improvement to an existing process through scientific or technological change, and work that seeks to duplicate an existing material, device, product, or service in an improved manner using science or technology. So let's have a look at some examples and think about whether they would qualify. First one we have here is a successful project would result in the design and development of a bespoke, highly durable tiling installation suit for a unique environment. I can see that would be a commercial solution. I'm not sure that you'd get an advance in science or technology there. The second one we have is the project must be completed within the confines of a limited budget and restricted time frame. Again, you've got there are some economic budgetary constraints to look at, not really technical or scientific. And let's have a quick look at the third one. During the project, the company sought to expand industry knowledge of the chemical and physical behavior of such stones under stress Okay, fine. So that ticks that particular box. Got a couple more. Maybe we can move on, Joe, if that's okay. There's a fair amount of material to cover. Okay, technological uncertainty. We need to, or the project needs to overcome technological uncertainty. So a project has technological uncertainty if a competent professional cannot say whether the advance is technically feasible at the outset of the project. To be a true technological uncertainty, the information on how the advance might be achieved must not be available in the public domain. It's important to note, however, that this does mean that if another company has achieved the advance, but how they did it is a protected trade secret, you can still claim for work involved in replicating the competitor's advance. Okay, again, a few examples we can look at. So the first one, there was no way of knowing if storing vast volumes of data generated by each project manager on the cloud would be possible. Okay, so I think that's just a storage issue. I can't see where it's either a yes or a no, so no technological uncertainty there. Second one we've got is it was not known whether the goal of the project could be achieved within the confines of the allocated budget. Again, it's a bit of financial uncertainty, no scientific one there. Third one looks a bit meatier. So although these synthetic stones are chemically identical to natural stones, their chemical structure can differ depending on the manufacturing method used. This can cause the stones to behave unpredictably when subjected to standard techniques such as ultrasonic cleaning. So yes, there are technological uncertainties involved in that particular scenario. Okay, a few more. Rather than going through all of them, maybe we can move on, Joe, to the next slide. Okay, and perhaps move on to the next section. Right, let's have a look at what eligible R&D activities actually are. So eligible direct activities contribute directly to the resolving of technological uncertainties. So that could be a trial or an experiment that's looking to overcome uncertainty. Eligible indirect activities do not contribute to the resolution of technological uncertainties, but are key to making sure the R&D can take place. So, I mean, this could revolve around perhaps maintaining machinery that you're using to blend products around various formulae. And you've also then got routine activities that do not contribute to the resolution of technological uncertainties and are not eligible for R&D tax relief. So, I mean, taking the products, for example, it could be that you end up with a situation where you're looking to market and brand something that has risen out of R&D. That would fall to be a routine activity, I think. Okay, so some examples. I mean, the second one down, the cosmetic design, as we've just discussed, that would be routine. Carrying out experiments and trials, that falls to be direct. And then we've got things like cleaning, which are indirect. Again, cleaning and maintaining machinery that are used in experiments and trials. Okay, so let's have a look. I think it's useful if we have a look at the heads of eligible expenditure. I mean, it's important to understand that no two scenarios, no two projects are the same, but you know, we can always group the costs into certain categories. So you've got staff costs, including pensions and bonuses, externally provided worker costs, agency staff, for example, raw material costs, software costs, utility costs, clinical trials, subcontracting costs, and contributions to independent research. They are only relevant when it comes to larger companies. Okay, so if we take these in turn, staff costs, one level, fairly straightforward to calculate, common to both the SME and the larger scheme. A company can claim for staff salaries, bonuses, employers' NI, and pension costs, as well as R&D related reimbursements, expenses. A company cannot claim for dividend payments or expenses that are not related to R&D, and I think that latter point is fairly self-explanatory. The apportionment of staff costs, I mean, you'll often get staff working on more than one activity. So, you almost need to think about how much of their time relates to R&D, how much it relates to other activities. So timesheets are great in that regard in that they can be very accurate. What they sometimes miss, however, is supervision or director time. Also indirect activities aren't always picked up. Sometimes timesheets need to be maintained for other reasons and for commercial or business reasons, and as a byproduct, that information can be used in the R&D claim. The other main methodology is a reasonable apportionment one. It tends to be less accurate in my view, but it's easier to bring in other peripheral activities and all staff, including more senior staff. Whichever method you use, it's important to make sure that the methodology is robust in case it's ever challenged by HMRC. Connected persons. This is relevant for some of the other heads of expenditure. So if we just think about what connected persons might be, in broad terms, this revolves around control. So where two entities are controlled by the same individual or same group of individuals, they're deemed to be connected. It's as simple as that, really. Externally provided worker costs such as agency staff. So this is a bit more detailed than staff and a bit more complicated than staff who employ, but it still applies to both the larger and the SME scheme. So for externally provided workers from an unconnected staff provider, an employment agency, for example, third party employment agency, one could bring in 65% of the payments. For workers from a connected staff provider, a group company, for example, 100% of the lesser of either the payment to the staff provider or the relevant costs of the staff provider can be included. So you'll often have, or you'll sometimes have in a group, an entity cost charging by way of a management fee, staff costs for workers used on a particular project. And once you've got the quantum of externally provided costs, you need to apportion them in the same manner as you would do usual staff costs, really. Okay, raw materials. Again, common to both schemes. All materials used, consumed, or destroyed during the R&D projects can be included in the claim. This can include wastage. For example, if a company has to buy a set size of something to test and only uses a small proportion of it, the remaining portion can be claimed for. Materials used to produce goods that are intended for sale, however, cannot be claimed for. Okay, this is interesting. Prototypes versus first-in-class items. So, the revenue have a very again, they have specific definitions around these two types of products. So HMRC define a prototype as a basic experimental model possessing the essential characteristics of the intended process, material, device, product, or service. It is designed and constructed for the R&D project and not for sale. This contrasts with a first-in-class item, which they define as a high-value prototype item in which there are elements of R&D and elements of commercial production. First-in-class items are intended from the outset to be for sale to a customer and not solely for use in R&D. So, to a certain degree, the main difference there is the sort of initial intention in production. Unsurprisingly, all of the raw materials used in the construction of a prototype can be included. For first-in-class items, it's a bit more restricted, and you can only look at raw materials that were used during the R&D phase, and not materials that were relevant to producing a final saleable item. Software costs, again, common to both schemes. This includes revenue costs of any software package used to support the R&D. You just need to think about apportionment. It could be that you're using a particular package for commercial work outside the project, so you need to think about how those costs need to be split. And also there are, subcontractor costs or subcontracted software development we'll come on to later, and it's more appropriate to bring them in under the subcontractor sort of head of costs, really. Utility costs, again, this would be water, fuel and power, again, common to both schemes. Heat and light costs can be claimed, although clearly you need to think about apportioning between R&D and non-R&D time. I mean, if one were to use the staff costs apportionment percentage and use that pro rata, that could be suitable. If heat and light are included in rent, again, I think it's right to take a portion of that rent charge, although rent, broadband, those type of costs can't usually be included in the claim. Clinical trials, I mean, it sounds like an obvious one, but they're common to both schemes. It basically relates to payments to the volunteers on the scheme, and there's no apportionment as such. Those costs are always eligible. Subcontractor costs. Now, there's a bit more detail here, a few more things to think about. SMEs can claim for any subcontractor expenses related to their R&D. For unconnected subcontractors, 65% of the cost can be included. For connected subcontractors, you can claim 100% of the lower of either payments to the subcontractor or the relevant costs of the subcontractor. These include staff costs, agency workers, software, raw materials, etc. And again, you need to look at the standard apportionments that one would always undertake. The larger scheme, this is more restricted. Claims through the RDP scheme cannot include subcontractor payments unless they're to a qualifying body. So you've got the usual universities, health service bodies, scientific research organisations, sole traders partnerships, and you've got the same connected, unconnected, 65, 100% apportionment to look at there. Okay, contributions to independent research, only relevant to large companies. The independent research has to be relevant to the trade and carried out by an individual or qualifying body, but a bit like a clinical trial would bring that in its entirety. Okay, so how do we actually calculate the eligible R&D spend? Let's look at a specific example. You've got company A that employs 4 people to work on their eligible R&D projects. Each of these individuals was paid a salary of £25,000 and spent around 40% of their time carrying out the R&D work. The company also spent £100,000 on raw materials during the claim year, of which 25,000 related to R&D, sorry, 25% related to R&D. The company paid for a license for specialist software for use in the projects, costing £3,000, and engaged a specialist company to assist them with the project cost of £10,000. So you've got 3 or 4 different elements there. And I think if we go to the next slide, you've got a little table that breaks that down. So staff costs, 40%, gives you the £40,000. Raw materials, you've got a similar calculation there. Software, as the kit was purely for the R&D project, we brought in the whole cost. Subcontractor costs, now this is a bit more of a calculation here. Whilst the subcontractor was used exclusively on the R&D, as they were an unconnected third-party subcontractor, we were only able to bring in 65% of that expenditure. So in this particular scenario, we've got eligible R&D of a shade under £75,000. What that would mean for corporation taxes, we bring in the 75 along with 130% on top, so an additional £95,000 odd would be brought in for corporation tax purposes. Okay, we've got another example here, but I'm just conscious of time, Joe. Maybe we can move on to the next section. And perhaps, maybe move on to the next slide, Joe. I think that's just an illustration of that second scenario. Okay, so acting as a subcontractor, a little more complicated. Subcontracted R&D can be claimed for. Three rules, 3 things to remember. Any work undertaken as a subcontractor must constitute R&D in its own right to be eligible for R&D tax relief. Companies carrying out R&D as a subcontractor to SMEs cannot make a claim for the work. That's an important point to remember. Companies carrying out R&D for a larger company can make a claim through the main scheme, the RDP scheme. Okay, maybe, it's a bit of a niche area. Maybe we'll skip some of the detail. Anybody who's interested in this is very welcome to contact us afterwards. Maybe we can move on. Should we move on to the next section, Joe? Thank you. Grants. Now, grants have an impact on the R&D claim. So there are 2 types of grants. There's notified and the non-notified de minimis grants, which tend to be smaller. There's a specific definition around those 2 types of grants. And if you're in receipt of a grant, you would get a grant letter confirming which category that grant falls into. One thing you should know: the SME R&D tax relief scheme is so generous that it is classified as notified state aid, in its own right. Okay, again, three basic rules to bear in mind. You can't claim SME R&D tax relief for a notified state aid funded project. So if you're in receipt of this type of funding for a project, it makes it ineligible for SME R&D relief. You can, however, claim for this work through the RDEC, and all other funded projects need to be split into the RDEC and SME components. Okay, again, a bit of detail here. Joe, maybe we can move on at this stage in the interests of time. Okay, we're done. Well, look, I hope you found that interesting and useful. Thank you very much for attending. You're more than welcome to contact us by email, reach out directly by phone after the webinar with any questions or queries. I'm not sure, Joe, I'm not sure if there are any questions at this stage.
Yeah, I have a couple of questions actually. And obviously anybody watching, if you want to use the Q&A to ask Riki any questions while we're here, then please start typing now, but I'll give you the questions that I've already got. The first one is talking about a team of programmers who are based overseas in India. Can we claim for their salaries, or is this restricted to UK staff only?
Yeah, that's an interesting question, Joe. And what's important is the entity undertaking the R&D needs to be UK based, i.e. within the UK corporation tax regime. If they are employing staff overseas, absolutely fine. Just need to have a think. I'm not sure if we're talking about staff that are employed or they're subcontracted staff. So you've got that 100%, 65% split to bear in mind, but the fact that these individuals are not UK based doesn't preclude a claim being made for them.
Okay, second question, how far back can I go in making a retrospective claim?
Well, no, again, a good question. You know, we often see situations where clients or new clients, sometimes we need to go back a little bit. I suppose if we think about it from the other side, the statute of limitation for an R&D claim is 2 years. So let's say you're looking at it, you've got a client with a December year end, December 20, given that we're in June 21, clearly be in time. December 19, again, that's within 2 years in time, but December 18, you've gone past the 2-year deadline, Joe, so no opportunity to make a claim there.
Okay. I've got time for one more, Riki. I've got one more here. We are a recent startup that's loss making at the moment. Would any HMRC R&D tax credit received be taxable?
So would the tax credit be taxable, Joe?
Correct. Yeah.
Okay. Fine. I mean, if you are in receipt of a tax credit, I'm guessing you're looking at a scenario where a cash payment's being made because you're making losses. Clearly, you don't want that income to be, or that grant money to be taxable in the same way that a furlough grant claim is, for example. Good news is no, it isn't. It's sort of below the line, and it's a tax adjustment, so it's not a taxable receipt, Joe.
Okay. All right. Okay. Well, that brings us to the end of our questions. Thanks very much for your presentation, Riki. As I mentioned earlier, we have recorded this, so we'll make an on-demand version available on the website later on today. And if you've got any further questions, then please don't hesitate to get in touch either through our website at rdpnewmans.com, or you can contact Riki directly. His email details are also on the website under our people pages. Okay, thank you very much, and we look forward to our next one.
Okay.